Hello, I'm Scott Brown, bringing you the market outlook for corn and soybeans today. I'm currently the Director of Strategic Partnerships in the College of Agriculture, Food and Natural Resources, and have been a long-time agricultural economist at the University of Missouri. As we think about the market outlook for almost any of our agricultural commodities, COVID-19 has certainly been one of the issues that's front and center in terms of what's been happening to agricultural markets. Always start by just reminding us what's been happening between the farm level and the retail level. Off the left-hand vertical axis is the change in prices received by farmers. So it's all agricultural commodities. Off the right-hand side is the consumer price index for food. And I just remind you that those have moved fairly well in lockstep when you look over the historical period. Yet when we start with COVID-19, you see that consumer price index for food has shot up quite a bit relative to where it's been. And at the same time, we've been talking about lower farm level prices. I think as long as we continue to deal with COVID-19, we're going to see that same kind of wedge remain, as there are additional costs, whether it's processing of ag commodities or transportation of those commodities or ultimately retailing of those commodities. Additional costs are being borne throughout the system as a result of COVID-19. Just a quick reminder that just how impactful COVID-19 has been. Here's a sit-down restaurant foot traffic map or graph just to show us in 2020 what happened as we got into that mid-March period, and talked about really shutting down many parts of the U.S. economy, and certainly seeing restaurants that were shuttered for a period of time. As we begin to open back up, you see the growth that happened in really May and June for the most part, but as more cases have come on board, we've really seen a flattening of that, and we're still talking about only relative foot traffic about 80% of what we would have seen pre-COVID levels when we were back at that index of 1. So COVID-19 is going to matter a lot as we move forward. I wish I knew exactly how that's going to play out, but at this point, we'll just have to wait and see. The one that continues to bother me is just what happens to the overall U.S. economy longer term and what that means for the demand for agricultural products. You see the graph here for 2020 that shows the very large decline in expected real GDP for this year. Just for a second, look at that in comparison to the Great Recession of 2008, 2009. The important point to me is we really don't talk about GDP returning to the 2019 levels until we get all the way out to 2022. We might often think about that affecting livestock commodities more than crop commodities, but I remind you things like biofuels that mattered a lot in terms of what was happening to things like corn prices as we look ahead. As we kind of look at what's been happening on crop prices, as we came off these record highs for all of these commodities, we certainly have moved lower, and we've been very much in a sideways pattern, frankly, for a period of time. And as crops have been big for the most part, I keep saying until we find some new demand, it's hard to get many of these crop prices to move higher. I often say we have a lot of sideways activity that's going to continue to prevail as we look out in front of us for many of these major crop commodities. I think it's important to talk about planted acres. Sometimes I hear discussion about, we need to cut the supply side down. I just remind us that, when you look at all 13 crops and hay acres, the gold line that we see out across here, we're talking about acreage in that 315 million acres, plus or minus 5 million acres historically. 2019, we fell dramatically. That had a lot to do with the weather that was going on at the point in time. I think many of us would have thought for 2020, we would have talked about recovery, maybe back to the levels we would have seen over that kind of 2015 to 2018 level, but we're well below that 8 to 10 million acres. If you kind of look just at the corn, beans, wheat, and cotton off the right-hand axis, it just reminds us that those 4 commodities have really been important in not getting back to where we would have seen before the turn down in 2019. So perhaps we are starting to see some overall planted acreage declines that might stick with us if these prices remain slow. Somebody reminded me that if you look at some of the state data, North Dakota, for example, might be almost a third of the decline that we see from 2018 to 2020 in that total acreage mix. Corn yields, I think we're going to get a lot of debate about corn yields. You know, I'm cutting this right after the August WASDE from USDA came out. We know there's been a lot of weather events across many parts of Iowa that I think will lower U.S. corn yields, but about 181 bushels per acre for a U.S. average is what USDA said in the August report. Missouri is also looking pretty good, getting pretty near that 180 as well. So it looks like we could have some fairly good yields, but again, I expect those will get trimmed down as we kind of see the effects of the severe weather that we saw in many parts of Iowa. I'll remind you, not only is that down corn that's mattered, the flip side of that might be what some storage facilities, both public and farmer-owned facilities that are going to be out of commission for a period of time. So if we have a fairly large crop, I think that crop has to spread out to other parts of the country to find bin space for storage. If we just take a quick look at the corn S&U that USDA provided us in August, first of all, a 15.3 billion bushel corn crop estimated by USDA with the 92 million acres planted, according to USDA, a fairly large crop. You look at the very bottom right-hand column, that's now a $3.10 season average price that's coming out for the 2021 year, according to USDA. We'll wait and see if we can push that up a little higher, but it just reminds us with the big crop that we have, we're talking about ending stocks at 2.8 billion bushels, up a half a billion from where we expect to come out of the current year that we're in of about 2.2 billion bushels. The demand side matters a lot here. Feed use, 5.9 billion bushels, up 300 million bushels. We're going to have some, I think, residual that's going to be at play there that drives feed use higher. I don't think we really are going to have that many more animals to talk about consumption of another 300 million bushels of feed use, but the residual component that there's, I think, will be important to that mix. Ethanol at 5.2 billion bushels. Again, I think we have to talk about some economic recovery that gets more folks driving again to get the increase from the 4.85 billion bushels of corn used for ethanol in the current year that we're in. And then last, pretty strong export growth as well. So USDA forecasting 2.2 billion bushels of corn to be used on the export side. We haven't been there for quite a while. It will require strong exports of the United States to places like China if we're going to talk about that. And again, I will say we might see some pretty good demand pop when you talk about corn prices that are 50 cents lower for a season average in 2021 relative to what we saw in 1920. So as big crops continue to dominate and demand that's not growing in leaps and bounds for many of these categories, that leaves us in a situation where we're talking about lower corn prices. On the soybean side, in many ways, it's a similar story. 83.8 million acres of soybeans planted, USDA saying a 53.3 yield on the soybean side gets us a 4.4 billion bushel soybean crop. That's rivaling back to where we were in the 2018-2019 period. So on the stock side, we do show, USDA does show a modest decline in stocks from the current year to the 2021 crop, but a 20-cent lower soybean price, so an $8.35 soybean price. As a result, that's going to take some pretty strong crush, almost 2.2 billion bushels of soybean crush up from where we were in the current year, but also some strong exports. So 1.65 billion bushels of soybeans being exported in the current year to 2.1 billion bushels being forecast by USDA in the 2021 year. I will say that depends a lot on what happens with China and phase one agreement that we have with the Chinese, but we're going to continue to need to see the Chinese grow exports of soybeans. Some of the things that's going on in China related to their hog herd with African swine fever, perhaps they're able to continue to grow that hog herd as we've seen through much of 2020, albeit a slow growth. I think will continue to contribute to some additional demand by the Chinese for soybeans as well. So we see a lot of sideways in terms of those prices. We'll have to wait and see just how everything plays out. I appreciate the chance to visit with you all today on the outlook for corn and soybeans. I hope that things turn out more positive from a price standpoint than what I've suggested here, but it certainly gives us a chance to think about taking care of some risk management when those opportunities arise. Thank you very much.